Good day, grade 11. I'm going to try again to do this presentation. Okay. We're going to look at the ledger accounts and then proceed from there in manufacturing. I hope that will help you understand the work. Just move that up a little bit. Hope you're well. Okay, here goes. Right, when we do manufacturing, you need to understand that there's two types of accounts. There's stock accounts and there's cost accounts. So the cost accounts we need to look at so that we can deduce the cost of sales, right? The stock accounts their balances are assets. The cost accounts will be expenses, but they contribute to cost of sales, like opening stock and closing stock for my periodic inventory system. So some of the accounts over here I did in periodic inventory system format, and some I did in perpetual, so that you can see the difference of them. Okay, so the direct cost account must be converted to a stock account. Okay, so direct stock. Okay, then we've got the direct labor cost. Now remember, direct material cost and direct labor cost is your prime cost. That those two we need to add my factory overhead costs to, so that I can deduce my cost of the manufacturing process directly. That is done in my work in progress stock account. So I'm going to have opening stock and a closing stock, and we're going to add the costs that we just included, and that difference will be how much it costs to manufacture the finished goods now. So we're going to open that with last month's, add this month's stock, that then finished goods that we produced. We're going to subtract the closing ones, and that's going to give me the cost of sales, which is going to go to trading account. Trading account. From the trading account, we're going to close trading account off to profit and loss. Profit and loss looks different to a normal account, a normal profit and loss for a manufacturer. Over there, on the debit side, we only normally have administration costs and my selling and distribution. That's we're going to then take to calculate my appropriation or capital, depending on whether I've got what type of organization I have. Okay, let's go and look at the different ledger accounts. The first one we're going to look at is as you can see, it's direct material cost stock. Direct material stock. So in direct material stock, we're going to have an opening stock or an opening balance brought down. In this case, I've got 30,000 that I bought last year that I did not use, or last month that I didn't use. Then here I've got my periodic inventory system. So this can also be done in the perpetual inventory system. So you need to look at the information that they give you to decide which one of the two methods to use. Okay? But if this is purchases, then it also means I can have carriage on purchases and excess duty and any other cost incurred in the acquisition of my stock will have to be added. Okay, so if we add that, the total is 300,000 rand. Okay, if I still have 40,000 left at the end, the difference between that 300 and the 40 is going to be taken to my direct material cost. Okay, 260,000 rand. So direct material costs, we're going to have, this is a hop, skip, and jump account, so we're going to have the 260, and we're going to close it off to my work in progress stock account, 260. Okay, next one, my work in progress stock. So over here, very important to remember the word cost. If you don't have the word cost, you can't have a solution. Okay, so please remember the word cost. So opening, this is, with other words, the goods that I've produced that are halfway done. So half a table, half a chair, half a tie, dyed shirts or printed shirts or whatever. So that, say, was 60,000 rand. Over here, we're going to add my direct material cost, my direct labor cost, my factory overhead. So in total, this organization spent 1,270,000 in the production process, right, up until here. So we are going to go and look at how many pieces of furniture, clothing, whatever, is still half manufactured. We're going to subtract that. So in this case, we've got about 80,000 worth of stock that's halfway done. We're going to subtract that. And the difference is going to be the cost of the stock that I've actually completed. So finished goods stock is going to be 1190,000. Okay. Now let's look at the labor, direct labor cost. Direct labor cost is cost to company. Okay. The cost to company will mean it is my wages or salary, if that was the case. In this case, normally it's the people that made their hands dirty, that's directly involved in the manufacturing process, and they're normally laborers, and laborers normally earn wages. So here, this wage refers to gross wage, not to net wage, not to creditors for wages. Please remember that this is gross wage. Okay. Often they want you to calculate this. So this can be a 12-mark calculation just to get that 337265. So watch out for that. Okay. Right. Then we've got our, to get my cost to company, we've also got to add the other contributions. So if there's a contribution to medical aid or pension fund, etc., those contributions must be added, but you will always have UIF contributions. Watch out for the UIF contribution. People tend to forget that. So those are added together. So the total my cost to company is then closed off to my work in progress stock. Factory and overhead costs. Factory and overhead costs will mean any other cost in the manufacturing process that's not directly involved. So my indirect laborers, the cleaners, the security guards, etc., etc. Then I've got indirect materials. So that would normally be consumable stores like cleaning material, coffee, tea, etc., etc., that the factory workers use, etc. Polish, lubricants, things that they use in the process. So your factory foreman salary or secretary salary can also be over here. That can, so those two are often relatively complicated, about 4 or 5 marks each. So it can be complicated. Then my rent expense, insurance, etc., etc. These are often quite complicated. But it, for instance, they're done per square footage. So if the factory uses 80% of the property, then 80% is attributed to rent expense for factory overheads. The other 20% will be divided between the administration and your distribution, sales and distribution costs. Insurance, same thing. Depreciation, same thing. Please note, you do not have assets in here. Repeat, no assets, only expenses. Very, very important. So that's how they catch you out. They catch you out with the calculations, and they catch you out by asking you to add in an asset. You need to know this is trying to calculate costs of sales. Right. That factory overheads, once again, is closed off to work in progress. Finished goods stock. So finished goods stock, we've got my opening stock, or the opening balance, my work in progress stock that we just calculated, and we're going to close it off to cost of sales. Right. If I have got goods returned, you can also have cost of sales on the other side, but it's highly unlikely. Trading account. So in trading account, I'm going to have my sales, and I'm going to have the cost of sales that I just calculated. This sales can also be relatively complicated, but they like to give you a method of calculating this, and you've just spent a whole 20 minutes or something like that to calculate that cost of sales. And then they say to you sales is 1.5 of that. So if it's right, wonderful. But they often would say, like, yeah, by now you need to go and multiply it. But often there's a kink in the cable with other words, they say to you like 3% of sales and distribution is or sales and distribution is 3% of sales. So you need to calculate it as a ratio. With other words, what do I have? What do I want? What do I want above the line? What do I have below the line? And calculate your sales. And that's a lacquer one, and that they try and use. The difference goes to my profit and loss. So administration costs is those expenses that is that is part of this organization, but it's not part of the manufacturing process. So that would be the administrative clerks that deal with salaries, and the administrative people that deal with everything else. It can be your telephones, etc., etc. A whole bunch of everyday expenses closed off to profit and loss. Selling and distribution costs, same thing. Salaries and wages, insurance, depreciation, etc., etc. Those are added off and closed off to my profit and loss. So in profit and loss, on the right-hand side, I'm going to have my trading account, which you know. But on the left-hand side, instead of listing all the expenses separately, I've got them added together for administrative costs and selling and distribution costs. The difference is then taken to my appropriation or my selling or my capital, depending on which organization type I've got. And that's it. I hope you enjoyed that. Okay. Let's end this.